Okay, so there's been a huge amount of information, good, bad, and different, coming into the market because we are in a very abruptly changing market. And so what we want to do is just sort of have a little bit of a chat about what I'm seeing, what you guys are seeing, and hopefully share some really good information with our people. And what we're looking for here is not to talk about statistics in the dry sense, but to talk about what we're seeing as professionals on the ground. This is information that usually takes about 30 to 60 days to hit the mainstream news feed because it's yet to happen. So right now, obviously, if anybody that's cracked a newspaper article or turned on the news, they've seen interest rates are going up and it's affecting housing pricing. So what does that mean right now if you are a buyer or a seller? So, obviously, we've seen a huge reduction in the number of properties coming on the market, and fewer properties are selling. We've also seen a reduction in housing prices. So what that means is that the price of houses have gone from where they were at this time last year. They peaked sometime around the end of February. And now we've seen a pretty abrupt retreat in those housing prices. But we are essentially where we were last year at this time. The housing prices are right back where we started. I'm not going to speculate on what's going to continue to happen with those prices. They could flatline, they could go down, and there's a possibility, I don't know exactly how, if interest rates continue to go up, there's a possibility those housing prices could go up. We're not in charge of sort of speculating on the future. But let's talk about what we do know and what most people who aren't real estate agents don't. David, tell us a little bit about the stock of buyers, how many buyers we have, and what's happening with that.
Yeah, right now the buyers are really stacking up. Probably have about 10 active buyers and maybe another 10 on the back burner. Part of that is the low inventory. I think it's a combination of, like you spoke about, the interest rates going up and sellers maybe not wanting to sell if they don't have to, and also seasonal trends with it just being summer and people wanting to be at their cottage and not worrying about that kind of stuff. So yeah, what I'm telling my buyers is to basically to be ready, because I anticipate in September, October, there will be more inventory coming to market. Partially because summer will be over, and partially because people will kind of start to realize that this is the new norm.
Tell me about what you mean by be ready.
Yeah, be ready. Pre-approval is obviously the most important step, and kind of start to really, dive in, get out and look at properties, even though it might not be the best fit for you. I think it's important to get out there and start to look at stuff and figure out what you don't want, what you want, and what the market looks like right now.
Okay. So that's you. You've got, let's say 20 buyers. What's this looking like? Are our colleagues sitting with the same number of, are they getting stacked up as well?
I'm hearing that from other agents as well, that they're stacking up the buyers. And I think that's going to have an effect on what happens when there are more properties on the market. And that may lead to, competition again. But I don't think we're going to see the crazy, bidding wars that we saw back in February and previous to that, because the interest rates will kind of keep that in check.
Yeah, and I think that's the sort of positive thing, is the interest rates creating a ceiling for how high a price can go, and also appraisals. People are being mindful of appraisals. The banks are being very cautious right now as well. So if somebody was in a multiple offer situation, how do they win if they can't offer more money?
I think it's going to come down to what's in the offer. There's going to be some conditions and stuff, and just kind of making your offer as clean and desirable for the seller is going to be very important, and that's where we come in, and our expertise are super important in crafting those offers and making them appealing to the sellers.
Yeah, so maybe like going ahead of time and making sure that there's no inspection clause, like knowing what you're buying before you put the offer in and that sort of stuff.
Yeah, and having those conversations with the listing agents and building that rapport, I also find is very important.
Right. Okay. Cool. From the buyer side, as David was saying, I think that we're going to see a lot more buyers coming into the market. We're in a little bit of a wait and see right now.
Yeah.
Probably why you have 10 people on the back burner. It's not that you've put them there; they've put themselves there.
Yeah.
So they're on a wait and see. They're interested to know, like,
for sure,
where the bottom of the market is.
100%.
Now we don't know where the bottom of the market is. Nobody knows.
No, and another thing that I'm telling buyers is, it's not necessarily about trying to time the bottom of the market. What is most important is getting the product that you want.
That's
at the end of the day.
Yeah, we're not, hopefully, especially us as a team, we're not necessarily working with people that flip properties. We're not day trading properties. For the most part, our clients, this is their home.
Yeah.
From my side, on the listing side, what we're seeing is a little bit of a change in terms of who is coming to us to sell their home. These aren't people that are looking to flip. That time is on hold. A lot of anybody that wants to flip is really, really uncertain right now. And that includes builders are starting to be quite cautious. What we are seeing are people, that are hitting our niche, the people that we like and try to work with, which are our upsizers. So people that are living in a smaller home and looking to get into something bigger or to change neighborhoods into maybe a nicer neighborhood. Those people are still active in the market. And the nice thing for them is this is actually a really good time for them to sell and buy because there's low inventory. The house is prepared properly. So we are able to get buyers for these properties. But more importantly, the difference between their selling price and their buying price has shrunk as the market has pulled back during this time. So there's actually a pretty good time for our upsizers to be getting into those bigger homes that they probably would have had to have paid, $50,000 to $100,000 more for that upsize back in February than they do now. So that part we're seeing. And then obviously, sadly, there are still people getting divorced. There are still people that are downsizing that bought their property for quite a lot less a number of years ago, 20, 30, 40 years ago, and they're okay with the pullback in the market. It's just time for them. And as you said, it's the right move at the right time. Mm-hmm. So we're still seeing that sort of stuff. And like I said, the important thing is actually preparing the house. We're sitting right now in a condo that is that we're listing tomorrow, and we've knocked it out of the park. Our staging on the cleaning and sort of general preparation, because we have competition. There are other properties in this building that are the same. And so how do we sell this one? We do a better job preparing it. Elaine, tell us about the rental markets and what's happening in there.
Well, the rental market has been really competitive and really active lately. A lot of people are coming back to the city, and also some who would have liked to buy a home are not really able to do so because of the higher interest rates. So they're coming back to the rental markets, and any units, especially condo units, are a really good investment at the moment for those who are thinking about owning a condo and renting it out. It's a really good time to do that right now because there is very high demand for rental properties, especially if they have a parking spot, if they're nice. Newer buildings, those are getting a lot of offers. They're usually getting rented for higher than the asking price, and renters have to move really quickly in order to be able to actually get the units in the first place. So this is what we're seeing now, and as I just mentioned, buying a condo unit for investment purposes is probably a really good thing to do at the moment because of the rental rates are pretty attractive right now for the investment perspective.
You're not going to have a vacant property sitting for a really long time.
Yeah.
So I guess two parts of that. If you are a renter and you're looking to get into the rental market, be prepared, because all of the things that were
Yes.
really tough for buyers before have translated over to the sellers. And like COVID is starting to pull back. People are returning to the office.
Yes. Yeah, a lot of competition for sure.
Yeah.
And we think that the rental prices are also going to continue rising. So this is something that's kind of here to stay.
Yeah, I think I mean there are a bunch of people that probably smarter than us in the real estate markets that are indicating that housing prices are going to continue to inflate, and a very larger portion of the real estate inventory is going to be owned by a smaller group of the population. It's like New York or London, big cities that are dominated by the rental markets. So going back to David, you have a number of lender contacts that you're in regular contact with. Just because things have been so fluid over the last few months, especially with interest rates changing, what are you hearing from your lender contacts?
Yeah, I'm calling my lender contacts a lot because obviously there's tons of information, in the media, but I like to go right to the source and kind of hear what they're seeing on the ground level. We do expect likely 2 more interest rate hikes to end out the year, likely at least another percentage, and then some people are speculating that in mid to late 2023, we'll see a dial back in those interest rates to kind of encourage spending again.
I gotcha.
And all that kind of stuff.
When we talk about a dial back, like right now they're doing, half, 3/4, 1% interest rate hikes. Would the dial back be that aggressive, or would it be slower?
They've raised the rates really aggressively to kind of, stunt the market and, control the housing prices. We expect a little bit of a dial back, but I mean, historically, we're in a pretty good space here at, 5%.
Sure.
Seems to be kind of healthy. I don't think we'll ever see the insanity of, basically free money when it was down in the 1%. But I think here we're in kind of a healthy place.
Yeah, I would agree. In terms of finding a healthy sort of medium. One of the things too that I've been hearing, because I have some friends that are in the larger developments. They build multi-story, multi-residential properties, and so they have what's called a long-term lenders. These aren't your typical sort of like mortgages that you would get for a house. This is to fund, a high-rise building. And so those are loans that are put out over a really long period of time for a lot of money. And those interest rates are already seeing reductions. And they're a bit of a predictor for what's going to, what the common folks are going to be able to see in the coming sort of year or so. And so my contacts have told me that their long-term lending rates have actually started to reduce already.
That's a good indicator of what's to come,
Okay, all right. That's it. Thanks for joining.